Please welcome Alex, investment partner at YZI Labs.
Hi, Mia.
Hi, Alex. It's been a minute since I talked with you. I believe market has changed drastically since we last talked. The first question to you would be, how do you make sense out of what's happening right now? Like, how would you describe the current state of the industry?
Yes, it's been a while. I think we all love like a bull market. There's a lot of interesting things to see every day, but bear markets have their own attributes as well. In fact, I think as an investor, most of the returns, like the outsized returns that we've done, came from investments we've done in bear markets. So it's a good time to invest. It's a good time to build as a founder. In a way, it's also better that you don't look at the markets. That there's people that actually delete the trading apps during bear markets so they can focus on building. Some people do that because they just lost all the money by trading. So I would say that the market is the market. You just take note of it. And as an early stage investor, in fact, you might as well, live and breathe during this cycle so that you can identify the best builders at this time of the cycle.
What would you say was the harshest thing the industry has experienced in the past 6 months?
Oh yeah, that's a very easy answer. We've experienced a bunch of hacks. Almost on a weekly basis over the past months, there has been some exploit of sorts of different magnitudes. That's always really unfortunate to see, and it sucks. But I think it also allows everyone to take a step back and kind of think about the security and the implication of how you should build in crypto. There is a lot of adversarial players, both like state-sponsored, all sorts of individual. Now that we have AI tools, it's actually very, very interesting time to be building, and everything that we have is developed at such a fast pace that the industry is changing.
You must because for whoever doesn't know, YZI Labs is connected to Binance. I imagine you talk with a lot of institutional investors. Even being here in London, everyone is more TradFi driven. Even if fintech, they're a little bit more closed off towards crypto. So crypto being down, I imagine you must have experienced some criticism to some sort. What has been the biggest, I don't know if the right word is pushback, but criticism towards the industry since the crypto market's been down?
Yeah, I think there's various ways to approach that. So yes, institutions and institutional investors are taking a lot more interest, and I think the reason why is because the regulation and the regulators, especially in the US, have opened up to the industry. So we have clear ways to engage with the companies that build and operate in crypto.
Yeah.
I think it was very obvious that this time will come. Although one of the main pushbacks that we all get, whether you're like a builder or a large crypto player like an exchange or a wallet, I think it's about the nature of the utility of the things that we build. I think crypto as an industry has been very good at producing a lot of speculation, which is very common. I think speculation is not necessarily bad. It's just if it's the only thing that is being produced, then there's a lot of pushback against that. So we're seeing it with prediction markets right now. I think the speculative angle took a foothold, but then the actual utility that comes from prediction markets, which is gauging people's opinion across different in different spaces, geographies, will take effect as well. Likewise, in the crypto industry, I think, let me give you an example. So I think stable coins are a perfect example of this. The initial idea for having a stable coin was to eventually promote more speculation, because in order for you to lock in your P&L, either loss or profit, you needed to have some form of integration with fiat rails before the advent of stablecoins. So someone, and we know who, came up with the idea of a stablecoin. Now you can move everything, including your speculative and locking in your P&L and all sorts of other speculative strategies into crypto-only rails. And that was great because then we could also start building DeFi. And with time, we kind of graduated from having a purely speculative utility into having more things like an earn product. Right now there's a lot of stable coins that pass on yield in DeFi to the users. And then the next wave of stablecoin adoption is in payments. So we started from speculation, we end up in actually delivering value for people in emerging markets that pay each other in stablecoins that were completely unbanked or primarily underbanked. So I think with time, we managed to actually produce value. It just took longer to get here than we initially anticipated.
Well, it sort of seems like, depending what is driving the industry, it feels like it goes in waves. So if we're talking specifically in terms of institutional adoption, it feels like now we're closer than ever. Why
Yes.
why are institutions more confident? Is it because now everything looks more solid? Is it because of regulation? What is driving that?
Yeah, so the regulation is just the spark. It allows people to sort of open up. If you roll back, let's say 1 or 2 cycles, if you were, you mentioned my alma mater, right, Goldman Sachs, and they have personal experience about that. 2017, if I went into a room, which I did, by the way, and you talked to like a managing director and you mentioned to him, hey, I really love crypto, during the weekends I trade Ethereum or participate in ICOs, and then I do later on like DeFi, yield farming. They'll look at you as if you're some like bonehead, right? They would think you're a gambler and would probably question how you got the job at Goldman. So it will put your career at risk, pretty much. Like talking about crypto and TradFi, and we have lots of examples, from the very top of the leadership of various banks in the US that argued they would fire people who touch crypto if they're an employee of those institutions. So that was around 2017, 18. In the meantime, we had kind of regulatory clarity around some aspects of crypto. And as we mature, it will cover the entirety of the crypto space. So now it's actually the opposite. Now, if you want to advance in your career in these institutions, you actually need to have a very clear strategy. How do you do, crypto or blockchain or digital asset adoption? In fact, if you don't have a strategy, you will likely be left behind, because apart from opening up a lot of revenue opportunities, there's various products this traditional financial institutions start building with crypto rails. It's also a cost-saving one. So you can, enable all sorts of different cost-saving measures by moving things onto chain. Not least like, tokenizing all sorts of what we call real-world assets. So for that reason, I think the regulation is just the small piece, like it's one Lego. Then we have like how much revenue on top you can generate, and how much cost you can save, and then how much innovation you can build. And we spoke, and some of your other invited, distinguished people on this show mentioned about AI. I think AI, the fusion of AI and blockchain, is almost inevitable, because agentic finance cannot happen with traditional banking rails. It's just not possible, right? Like you have $1, you can split it into 100 units, right? Cents. And that's about it. Like you only have 2 decimal places that you can operate with. Of course, like in the back end, you can do more division if you want. But blockchain actually are divisible all the way to like a lot more decimals. And that's just one example. The other is that blockchains are by default programmatic. So, programmable money, we heard that a lot in the previous cycles.
Yeah.
It's actually needed to enable agentic finance. And it has to work 24/7. It has to be secure, ideally decentralized as well, and also open source if you want to really like gain lots of adoption.
Yeah. What do you see as, if you do, as demand from the institutions? Like, what's something that they want from the industry that maybe is not there yet?
From crypto, I think they need a few things. I think they really need people that are serious about building important, useful applications.
But
I
more
think
specifically, because there
right.
might be someone listening that, like, that might be a bit too vague.
Sure. So I think, look, crypto has a culture of trying things out, and then if they don't work, like people just discard them. I think permanence and sort of more professionalism in crypto is something that will
Right.
likely be required in order to get a foothold with these institutions. Now
Yeah.
that means that the industry matures. It's probably going to get boring as well at some point, but
Mhm.
that's what happens with all the industries. I think we've seen it on and on, from the automotive industry, which was kind of a very eccentric way to move people around, to now highly regulated and perhaps somewhat boring at times.
That's an interesting comparison. um, okay, so from that angle, what's an established company that the public might perceive that will stick around for a while, but in your perspective, it's just not going to last?
Oh, that's a very loaded question. I don't want to bet against any company, to be honest. I think
You're
there's
not bet-
going to
this is just a fun question. Like, of course, this is not investment advice. Like, this is a fun show, and people should take responsibility while watching. This is more entertainment.
got it. Okay, let me answer this in the following way. So, I think banks, like legacy traditional banks that we all know, are probably not going to last in the shape and form they are right now. I think every single bank will become a stablecoin company. So that's really it. They say they're going to pivot into having most, if not all, of their infrastructure working on a blockchain based model, with the currency being denominated in a stable coin format.
Mm-hmm.
Yeah,
That's it. That's the banks.
that's
Okay.
it. Yeah, banks are not going to be around in the way they are right now. Yes.
Okay, I'm bullish on that. I like that. What's the single most rewarding bet you've made on an underdog founder?
Yeah, that's I mean, we have, this is asking a parent, like, which one is your favorite child. I think we have a
Wow,
lot of good bets that we've
that's
made.
fun.
Also, okay, so I think we work with a bunch of founders. I like Athena founder, guy. He's good.
Oh yeah.
I think what's really stands out about that is like how they think about risk management, and that's very
Okay. Yeah.
important, especially in markets like this, right? So like turbulent markets reward the ones that have the most risk management hat on. So that's one example amongst a lot of other great founders we backed.
What do you think, as a category, as a vertical, in hindsight, was a bad bet that you guys specifically bet on?
I think it wasn't just us. I think as an industry, we kind of got very hot about like GameFi and metaverse in the previous
Yeah.
cycle. So I think that was a pretty big sort of oversight. I think it was very short lived because people were really participating in those, ecosystems, um, as a way to yield, to farm yield with extra steps. So the game were the extra steps. It wasn't really because it was really fun to play, and they really enjoyed the attributes of those games that they really stuck around. In fact, no one did. So most of those games are actually dead. Token is down, 99%, and everyone kind of forgot that we went through that very exuberant period. So much so that some of the big tech companies actually changed their name as well towards like a metaverse inspired
That's true. Do you
company
think it's
name.
not going to come back?
I think, look, the product market fit makes sense to have digital assets in the form that people are still buying and selling. That happens even now with a lot of non Web3 or crypto based games. But they're not portable, and those are locked in those ecosystems. So putting those on blockchain rails, like skins for different items in games, makes sense. But I think it will not happen as fast again as we might think, because no one is actually necessarily like finding that as a big hole in their gaming experience, right? So if I play games sometimes, first thing that I log into a game, I don't think about, hey, can I take this and put it in my wallet? What I'm looking for is like, is this game fun to play? If it is fun to play, and then I discovered all of its features, perhaps only then that I get to the point where I start actually actively investing time and resources in the game. I think then, well, perhaps, I spent like $100 on this game. Perhaps I should be able to also monetize that effort. So if I open a bunch of loot boxes and I get some rare items, I'd want to actually be able to sell that or loan it out or whatever
Yeah.
other financial transactions that might be available. As it stands right now, that's not really possible, and perhaps a reason is because it's on purpose. But imagine you have a game like GTA 6. It will have like hundreds of millions of players. If you take that game and then put it on blockchain rails, and it will have its own currency, its own kind of economy, you would essentially be building an economy that would likely be larger by GDP, numbers than a lot of like European countries.
Yeah. Like when I was younger, I don't know, I didn't know about crypto at this point, but I have two examples. One was a social media platform, and another was a game that I played a lot, this game. So the game situation was, you make a lot of money on this game, and then you have a shop, like you can open a shop and you can sell stuff. This was Neopets, for anyone watching, if you're familiar with it. And you can earn Neo points. And I remember making so many Neo points. I would have my brother like playing on my account as well, and or like transferring by buying something from my account. And I was really excited about it. And I even had my account hacked. That's how much Neo points I had there. But I remember thinking like, oh my god, like would be so cool if this was money. And like I was young, like like 50 euros, I guess, would have felt like this is awesome. And I had like way more. Like today I'd be like, this is probably more like, I don't know, like 1,000. I don't know, maybe I'm exaggerating, but I remember having that feeling, and I never had any concept of crypto. And then the other example is, there was a competitor to Musically, which is what TikTok is today.
Yes,
Musically
I
is
remember.
what TikTok was. And I had a big profile on Musically, and this company approached me. It was called Cheese, with a Z at the end. I think they were from China or something. And you would earn some points, some cheese, and I believe that one would translate into actual money. So I remember like reposting all my content there. There was nobody. I think I was one of the people that were posting most amount of content. And ironically, I never withdraw. I don't know how, maybe it wasn't possible in the beginning or something, but it got me excited about it. So I I think there's a way. I don't know if younger kids think like me, because I'm a little bit crazy, but um I still feel, I don't think the metaverse, maybe, I don't know, I think that feels like a stretch, but this the gaming industry, I feel like it could work.
Yeah, I agree. I think those are great examples. So where you can see product market fit. It's just it also requires a fun game, not just the
Yeah.
mechanics that are enabled by the blockchain. So we're still not there. If we had some fun games to play, they probably were not discovered. I have not seen them, but yeah, in the meantime, I think we'll get back to this question: can we actually enable GameFi? But on top of really, really fun games, not just some mediocre
Right.
gaming experiences.
Yeah, the game comes first and then that comes later.
Correct.
Alex,
Yes.
thank you so much for joining me. It's been a pleasure.
Of course. Thank you, Mia, always.